Welcome back to Explain the Charts, everyone. Today, August 7th, 2025, the financial world is buzzing with significant news impacting the BoE pair. Recent headlines from sources like FX Street and Investing.com indicate that the Bank of England has delivered a hawkish cut by a slim majority. This unexpected stance from the BoE, coupled with climbing U.S. jobless claims, has ignited a strong bullish momentum for BoE, pushing it above the 1.3400 level. While our provided daily chart data ends yesterday, August 6th, with a close around 1.33571, this news suggests a significant rally is underway today, confirming the market's reaction to these economic developments. Let's zoom out and look at the daily chart to understand the broader context of BoE's movements over the past year. You can clearly see a predominant uptrend beginning around March 2024, with the pair steadily climbing from the 1.25 area. This level, around 1.25, initially acted as strong support, as seen in late March and early April 2024, before the price broke out. The pair then faced considerable resistance around the 1.30 to 1.31 mark several times throughout 2024, most notably in July and October. However, each test of this resistance eventually led to a successful breakout, demonstrating underlying bullish strength. By late June 2025, BoE peaked around 1.37, marking a significant high within this dataset. Following this peak, we observed a healthy pullback, with price consolidating and finding new support around the 1.31 to 1.32 range during July and early August 2025. Now, let's zero in on the most recent action on the one-day chart, specifically the period leading up to and including August 6, 2025. Notice the bounce from the 1.32 region in early August, suggesting buyers stepping in at this lower price level. The candle for August 6th closed at 1.33571, a strong bullish signal given the recent pullback from the 1.37 high. This close, near the daily high, indicates significant buying pressure at the end of yesterday's trading session. This strong daily close sets the technical stage for the news-driven rally we are seeing today, pushing the price above 1.34 as reported by the news outlets. To get an even closer look at the intraday dynamics that contributed to yesterday's strong daily close, let's switch to the 15-minute chart, focusing on the first few days of August. Here, specifically looking at August 5th and 6th, 2025, you can observe the price consolidating around the 1.328 to 1.33 area on August 4th. On August 5th, despite attempts to break higher, the price initially met resistance around 1.331 to 1.332, pulling back to find intraday support around 1.327 to 1.328. However, a clear shift occurred throughout August 6th, with sustained upward momentum visible across multiple 15-minute candles. The consistent higher highs and higher lows on this granular time frame directly led to the strong bullish close of the August 6th daily candle. This detailed view confirms that the buying pressure was building even before today's major news announcements, reinforcing the overall positive sentiment for BoE. The significant volume increases on bullish candles within this period, especially on August 6th, further validate the strength of the move. Now, regarding the one-hour chart data provided, it's important to note that its latest entry is from July 23, 2025, making it an older snapshot compared to our daily and 15-minute data. However, within its own time frame, specifically from July 18th to July 23rd, the one-hour chart clearly showed a consistent bullish trend. Price moved from approximately 1.342 up to 1.356 during this period. This indicates that sustained upward movements can be a characteristic of BoE when strong directional momentum takes hold, as we now anticipate with today's news. It provides historical precedent for the kind of rallies we might expect if the current bullish sentiment persists. So, what are the key takeaways for traders right now? For short-term prospects, the news of the hawkish BoE cut and weaker U.S. jobless claims today is a strong bullish catalyst, pushing BoE above the critical 1.34 level. This suggests a retest of the previous resistance at 1.35, and potentially the 1.37 high is highly likely in the coming days, perhaps with a 70% probability if global risk sentiment remains positive and U.S. data continues to show weakness. Look for sustained trading above 1.34 to confirm this bullish conviction. The immediate support level to watch now is the psychological 1.33 mark, reinforced by yesterday's daily close. For long-term views, the overall uptrend on the daily chart suggests that any pullbacks, like the one from 1.37, are potentially healthy corrections within a larger bullish channel. A strong long-term bullish case, 60% likelihood, would be reinforced if GBPUSD establishes clear support above 1.34 and continues its ascent towards and beyond the 1.37 mark, potentially targeting 1.38 to 1.39. Conversely, a sustained break below 1.33, especially if driven by hawkish comments from the Federal Reserve or stronger U.S. economic data, could shift sentiment to bearish, potentially retesting 1.31 to 1.32. This bearish scenario, 40% likelihood, would require clear rejection at current levels and a break of immediate support. Always keep an eye on upcoming economic data, especially central bank statements and employment figures from both the UK and the US, as these will be the primary drivers of future price action. Remember, volatility is part of currency trading, so manage your risk wisely. Thank you for joining Explain the Charts, and we'll see you in the next one.